Mary Daly right there, not actually having that big of an impact on the markets, believe it or not. We're seeing the futures higher right now, as we just mentioned, the Dow on a multi-day win streak. What did you make of her comments? What do you make of what we just continue to see as a stream of Fed officials giving their insight?
I mean, we're very confident at putting capital to work at these levels. We think that starting US 10-year yield of around 4.5% is a great tailwind for investing in high-quality companies over a 3 to 5 year time horizon. Whether interest rates remain at their current levels or we do indeed see rate cuts in the near term, isn't a chief concern for us, because we're investing either in companies, innovators who are driving prices down for customers, which is where demand is when rates are high and we're all feeling the squeeze, or in companies who are expanding the quality to price ratio for customers. So they've got pricing power, so they can really weather high interest rates. So whether we see 1 cut, 2 cuts this year, we'll just have to wait and see, but we're just focusing on the fundamentals.
I'm sure the audience, they can kind of infer what you're talking about. What you're talking about is those big AI players. You have a lot of confidence in them. They have these tools that many companies believe can drive down their cost of labor, also improve productivity. But right now you're saying, we've seen the rally in the headline AI players. Now it's time to look at basically what the picks and the shovels are of this AI gold rush, just to keep the metaphor going. You have some interesting stats. So you say because of AI, we're going to see a huge replacement cycle. More than $1 trillion for data centers alone. Explain to me, what kind of stocks are going to benefit from this replacement cycle when it comes to artificial intelligence?
Absolutely. So, I mean, what the key message from earnings season so far has been that demand for AI infrastructure is not going away. We've seen this in the hyperscaler capex numbers. These were sensational numbers. Meta, Microsoft, Google, they collectively increased their capex expectations for the year by $10 billion in just Q1. Now, this elevated capex spend is a major support for the growth runway for leading companies in AI infrastructure. So NVIDIA are the most obvious example here, but they're certainly not the only company. We heard from Arista this week. They reported blowout numbers. Now, they provide the Ethernet networking for the likes of Meta and Microsoft. Actually, 40% of their revenues are directly tied to the capex budgets of these two companies. So they're in a really strong position as these companies continue to build out their data center expansion. I mean, that $1 trillion of data center infrastructure that's got to be ripped out and replaced, that is because we've got to see companies transition from general purpose computing to accelerated computing in order to power all of the AI-related software that we all use today.
So, Claire, I feel like you might be watching the show because you also gave us a list of underappreciated tech names. So one of them is one that we spoke about on the show quite a bit yesterday. I'm going to give you the whole list. Tesla, which is surprising to think it's underappreciated, but TSMC, and the last one's NVIDIA. So we talked quite a bit about on the show yesterday. Is it overvalued? Is it undervalued? It sounds like you think it's actually undervalued, even though it's trading, according to our system, 37 times forward earnings. We had a guest yesterday correct us and say it's actually 31 times forward earnings. Either way, quite a premium over the S&P that trades at 20 times.
Yeah, so I have around 35 times forward earnings. But I mean, the key point is that NVIDIA is still trading on more or less the similar multiple as it was this time last year, because the fundamentals of this company continue to move ahead of the stock price.
But who's not appreciating it?
So the market is pricing in for 2024 85% revenue growth. Now, we think that this is conservative. If you take TSMC's revenue guide for their AI-related processors, they're saying that this is going to double this year. Now, that's very significant because this is a very conservative management team. But TSMC probably have the most visibility of anyone on NVIDIA's revenue streams because they see the orders first. So if you apply this guide to NVIDIA's data center business, and even if you factor in a 5 to 10% market share loss to AMD, you get to a revenue growth rate of comfortably above 100% for the year. So we think the market is really underappreciating this AI build-out. NVIDIA is leading on product innovation velocity. Competitors are finding it very hard to catch up.
So your underline is that NVIDIA is actually undervalued?
Yes.